We've got the first set of earnings now from a royalty name. And as we said in the past, it's a tough business to be in. But the rising price of gold is making that business a bit easier, at least on the surface, because it allows operators to mask declining production. And that's exactly the scenario Sandstorm Gold found themselves in the first quarter, posting record revenue despite attributable gold production being slightly down. Let's dive in. Sandstorm Gold in the first quarter recorded revenue of $50 million, which the company says is a new record for the firm. Revenue improved 17% on a year-over-year basis from $43 million last year. That improvement was off the back of 18,492 attributable gold equivalent ounces being sold at an average realized price of $28.80 an ounce. Attributable ounces were down, however, from the first quarter of 2024, which saw a total of 20,316 ounces sold at an average price of $20.62 an ounce in the year-ago period. Well, revenue per ounce was up, so too was the average cash cost per attributable ounce. Average costs jumped 33% year-over-year, going from $280 to $371 an ounce. Cash operating margins, however, rose even more, going from $17.82 to $25.09 an ounce, a 41% increase. Net income for the quarter improved to $11.3 million, or 4 cents per share, as compared to a net loss of $3.9 million or 1 cent per share in the comparable period. The big story here, though, is cash flows, with Sandstorm posting cash flows from operating activities of $40.7 million in the first quarter of 2025, which was the best performance from the company since the second quarter of 2023. The year-ago period, meanwhile, saw cash flows from operating activities of $32.4 million. Sandstorm ended the quarter with cash and cash equivalents of just $3.5 million, which was down from $4.4 million versus last year. Working capital, meanwhile, sat at $14.4 million. Net debt repayments during the quarter totaled $15 million, with a further $12 million paid down subsequent to quarter end. As of May 16th, $328 million of debt remains outstanding. The first quarter also saw the company pay out a dividend of 2 cents per share, while buying back 3.1 million shares for total consideration of $19.1 million. Looking towards the remainder of 2025, Sandstorm has maintained guidance of 65,000 to 80,000 ounces of gold equivalent. The estimate is said to consider a range of commodity price scenarios alongside a phased ramp-up at the Greenstone mine operated by Equinox. That guidance, of course, is a bit variable. A 10% change in copper or silver pricing is expected to result in a change in attributable gold equivalent ounces by about 1,500 ounces. Sandstorm also added that they have a path to 150,000 ounces of production by 2030, which is premised on the exercise of a gold stream option on the Mera project in Argentina. But more near-term, guidance for this year represents a decline from the 2024 production figure of 72,810 ounces on a midpoint basis. So clearly, there's a few challenges at hand that need to be addressed before we get too excited about where things might be down the road. So where's that production growth expected to come from? Well, the most obvious one right now is the Greenstone project, which is currently ramping to capacity. Equinox is currently calling for that to occur mid-2025, and once fully up and running, the operation is expected to contribute somewhere between 8,000 and 10,000 ounces annually to Sandstorm's portfolio. Slightly longer term is the Hod Maden joint venture operated by SSR Mining. Early works capital investment is currently underway at the project, and once fully operational, the mine is expected to produce 195,000 ounces of gold equivalent per year. Sandstorm has a 2% NSR royalty here, alongside a stream of 20% of the gold, which drops down to 12% after 405,000 ounces have been delivered. Current estimates suggest the mine will deliver 33,000 to 39,000 ounces of gold a year to the portfolio, beginning in 2028. And there is the Mera project, operated by Glencore. While not expected to be operational until 2029, the mine is expected to provide 20,000 to 30,000 ounces of gold equivalent to the portfolio. It's currently expected that Glencore will submit an application for the project in the first half of this year, while advancing feasibility and development work. All right, so let's wrap it up. This was a bit of a shorter video than our viewers are used to, but that's the thing about royalty names. They're simple, with not a lot to them. And with Sandstorm seemingly focused on debt reduction, well, it's not like they're buying a whole lot of new streams or royalties. That being said, their reserves and resources are still growing. More ounces were discovered on Sandstorm's royalty properties last year than was pulled out of the ground. So there's plenty of upside left on the table for Sandstorm in terms of their current portfolio, and current reserves support what they call a 20-year mine life, though in practice it might not be that much of a straight line. In any case, it was a decent quarter, and if production can be maintained at this rate through the remainder of the year, Sandstorm will be able to continue to pay down debt, provide a little extra to shareholders, and still come in above their guidance midpoint. All right, everybody, thanks for watching. We've got lots of earnings videos for you over on our channel, so please check them out. Also, if there's stories you want us to cover, please let us know in the comment section. Thanks for watching, everyone.